Hi, let me just share you. Let me just share this particular application with you. I'll just try to explain you how this whole system works. This particular app works. It works on your mobile also. So the mobile app will be ready very shortly, but simply you can start using it on your web browser. Now we have 5 buttons here. Add groups is nothing but we add certain groups here. Watch list is where we get the trades. And settings button we predefine certain values the z-score as 2.7, that is the entry value. Z-score. Correlation I just put it as 0. Amount 8 lakhs is nothing but your total turnover, that is your turnover on each trade. So I just put it as 8 lakhs. On 8 lakhs I'll try to calculate the profit also. The exit number of days of any trade will be 45 days. You can even reduce it also. And the exit z-score is 1. So your entry is at 2.7, your exit is at 1, your lot size is 1. And that is the lot size defined by your NSE. And my trades is the place where once I get trades on watch list, I go into my trades, that is in separate box, wherein I can just watch whatever trades I've already entered. And log out is a button where you'll just log out. So coming to this add group, so first thing what we like to do is we like to segregate the sectors. That is in banking, IT, auto, ancillary. Like this, we have segregated into around 23 sectors. That is including the MCX. Now in this particular banking sector, what we have is banking scripts. So we have these banking scripts which are there in the F&O segment. We have just added this. You don't need to do all this exercise. This is all done. What you like to do is you like to just place your trade whenever you get it. So I've done this. So I've added around 22 scripts. That is the banking scripts that's there in the F&O segment. Likewise, I have done it for IT. These are the scripts that is there in the IT segment. So auto ancillary is there. I've taken automobiles into automobile ancillary, auto finance, and auto regular automobiles. Now let me just show you how I add these symbols. Now Apollo Tyres, MRF, Exide, and Motherson Sumi, we have the scripts. So I just select all the 4 scripts, and then I just click on the backtest. This is the button, backtest button. So what it will do for me is it will back my complete 10 years of data for all these 4 scripts, and it will try to give me the trades that are happening. So I just clicked on backtest. So the next screen refresh, you can see that it will take some time. So when you get this, just click on wait. So my backtest results are ready for the 6 pairs. That is Apollo MRF, Exide Apollo, Motherson Sumi Apollo, Exide MRF, Mother MRF, Mother Exide. Now the average correlation, this correlation is something which keeps on changing. So that is one thing. And you will get this highest losing trade and the highest winning trades, and the percentage of winning trades also. Like in case of Motherson Sumi and MRF, it is around 94%. So in 17 trades, your 94% of the trades are positive or profitable trades. So one criteria for picking up a trade is your correlation should be 70% and above. This keeps on changing, so you don't need to worry if it is 30 or 40 right now. Maybe in another few days or a couple of weeks, this will come to 70, and probably you can get trades also. So the criteria for winning trades is it should be more than 70%. Always try to take trades which are more than 70% and above. So in this case, you can see that auto ancillary, all the pairs what we have, the 6 pairs what we have, are having a winning trades of 70%. So roughly, this is also you can consider it as 70%. And here, the maximum losing trade, 1 lakh or the odd what you see here is 2 lakhs, 1.5 lakhs. This will usually be because there would have been a split. So that is the reason why you are getting such huge figures. In the same case, even the highest winning trades also, there might have been a split here. So that is one of the reasons why you are getting such high profits. But on average, this is a realistic figure. 20,000 or 70,000 or 1 lakh rupee, realistic figure, not this 4 lakhs, 4 lakhs or 6 lakhs or 10 lakhs or whatever you get. Those are not the realistic figures. We'll come back. I will show that to you in the backtesting details. Now what I do is I will add all the scripts into my, I select all and then add it to my watch list. So I have already added, so it's giving me an pop-up saying 0 records added to watch list, 6 records, whatever I have here are already existing in the my watch list. So the screen will refresh automatically. So once it gets refreshed, we'll go into the watch list. So click on wait. So you have come to the watch list. Now here in the watch list, you can see that the last time, that is, it refreshes. The server is set in such a way that it refreshes every 1 hour. So 10:30 got refreshed. The next refresh will be at around 11:33. But instead of watching this refresh, what you can do is in case of intraday, if you're in the market, you can just check your MTMs. So if you check your MTMs, that will give you a perfect figure instead of giving you 1 hour of refresh. Now I just come back to the original the main menu. So likewise we have auto ancillary, auto finance. We have we should be adding one more here. We have the cement companies. So we have done the group, so you don't need to redo this again. We have done the basic work for this. So I just come back to this and then let me into the watch list. Now I just click the watch list. I have already done my settings. So watch list is a place where you will be getting the current running trades or the trades yet to come or the trades which are closed. So this we have given a privilege where you can alphabetically see it in an ascending order. You can see that ACC, Arvind, likewise we just keep on going till the last script. So that is it. Or else you can even do this. You can click on the ID. So it will actually show you the number of trades. There are 305 pairs which are existing currently running. So that's on an average one pair per day also. That's a huge figure. But we actually have more than 600 pairs which are there in our server. But these 305 are the trades for what we have done the settings. So we have got this trades now. So you can do alphabetically. You can choose it, or you can choose from the z-score. The z-score is nothing but this 3.5. We have already set it at 2.7. So 2.7, you are just this figure 2.6. This is the z-score, and the trade status. The trade status is nothing but the trades which are currently running. That is trading now. These are currently trading. These are the trades that are already running, and these are the trades which are yet to come. So you can just see that. Now other than this, we have set the correlation also. The correlation is nothing but, I will just come back to the technical part. You can arrange the correlation in an ascending or a descending order also. So right now we have Maxi and Sun Pharma. The correlation is the highest for this, that is around 98%, 98.4%. And you can choose the sector also: agriculture, auto ancillary, banking, These are some default things that we have, so you can use them. And then RSI also you can set it. I will come back to this. This is again a technical part. RSI volatility, these things also can be done. Now let me just come back to this. So I have just taken the correlation. So I have chosen according to the correlation. So now for an entry, so these are some of the important things that you should follow. For entry, your Z score should be 2.7 or above, and correlation should be greater than 70%. And the next thing, once you do the correlation, next is your winning trades. I'll show you this. Winning trades should be more than 70%. So these are the best conditions under which you should take a trade. Now I will show you the other conditions also. Now once we have this correlation, let me choose this. I will initially take a trade which is currently running, that is Unionbank and Bank of India. You can see that this is trading now. The correlation is perfect, more than 70%, it's 79%, and it's in the banking pack. The RSI, whenever you have the Unionbank here short, your correlation should, your RSI should be for a sell call, the first sell call in the sense for the first script, the left side script, your RSI should be 70%. Left script, let me put it as left script. Let it be any script. For the left script, RSI should be 70%. And in case if your left script is green in color, then that is when red, you have this red. So you are just saying that Unionbank is in red. So your left RSI should be around 70%. And the other factor is volatility. Volatility should be 2.5%, roughly around 2.5%. In this case, you are seeing that this is already in trade, so you are seeing 2.09. It has come down from 2.5 to 2.09, and this 55 RSI, what you are seeing is a current RSI which keeps changing. So let's go and check what's happening in this trade. Now, how do we trade? So what you'll do is you'll short one lot Unionbank in futures, and you buy Bank of India one lot in futures plus 844 shares in the cash market. So this is your trade. The idea here is simple. When you are taking Unionbank, so the Unionbank 159 into your lot size, whatever figure you get, should be equal to Bank of India, the price 199 into the lot size. In case if you have any shortfall, then you buy in the cash market. So that is very simple. Now let me just show you the trade. So I click on that particular Unionbank and Bank of India. Now we go into the trade. Now this data what we have, you can see the graph of Bank of India and Unionbank. So Bank of India slightly performed better than Unionbank here. So you have the data right from 2004, that is roughly around 10 years of data is what you have. So this is back tested for 10 years. Now let me come back to my present running trade. Now here what the bars what we have is nothing but the total turnover on that particular trade. So it's around 8 lakhs here. So the current is around 11 lakhs. So in case if your broker is giving you 10 times, so roughly your investment will be around 1 lakh. So 1 lakh on 1 lakh you calculate your return on your investment, that is profit. Now coming to this particular so I have told something about the winning trades. Now you can see that the winning trade here is 81.25%. So our second condition, that is the winning trades of more than 70%, is what you'll have to look at is satisfied. So your winning percent is 10% more than that, so that's a good indication. Your correlation should be around 70%. I will show you that. So I just click on this and then come to the end. So this call was generated on March 26th, that is the day before yesterday, where Unionbank, we shorted at 167.1 and we went long on Bank of India at 197.95. Now here are the conditions. Your z-score should be 2.7, 2.83 is your z-score. So once your 2.7 and above is reached, it will automatically give you a prompt saying that there is a call in Unionbank and Bank of India pair. Now you have the correlation here. The correlation here is 96.77%. So that's a very good correlation. It should be more than 70. That is what we were asking for. So the first condition is met, that is 2.7 and above the z-score. The correlation should be more than 70%, that is also done. The winning trade should be 70%, that is also done. That is 81.25%. The left script, when the left script, that is Union Bank of India, is in red, your volatility and your this one calculations will come into effect. So your when you have the left script as red, your RSI should be around 70%. That is also perfect, 72%. Now your volatility should be around 2.5. This is the last criteria was what we consider. It doesn't matter. So it's around 1.43. Now we got this trade. So you have short one lot in Union Bank in futures, and you went long on Bank of India one lot in futures plus 844 shares in the cash market. Now let's come back to this. So your trade started on 26th. On 27th, that is during the market close, your profit is around 20,000 rupees 396. 20,396. Now how do we get this? This particular script which we went short, that is Union Bank, when we shorted at 167, it has fallen to 159. That is the perfect trade. Now whatever we bought, that is Bank of India, what we bought at 197.95 has gone up to 199.10. Now that is the reason why we are seeing this profit. Now where do we exit? This 1.17 should come to 1. That is where we exit. On an intraday basis, this would have come, this would have happened even yesterday also. Since we are doing the refresh every 1 hour, you might not get that. So in that case, what you should be doing is you just check your MTMs after you enter the trade, then see what is your profit. Now 20,000 rupees is a profit on the first day itself. You enter on 26th evening, that is during the market close, before the market close. On 27th, your profit is 20,000 rupees. Now Bank of India, let me come to the calculation of your investment. So Bank of India, your one lot will cost you around 17,000 rupees. 17,000 rupees for one lot, and your Union Bank will cost, I am giving you the margin requirement for these two things. Union Bank you need 12,600 rupees. So plus roughly around 29,000 rupees in futures is what you need. Now apart from this, we will have to buy 844 scrips shares in your cash market, that is Bank of India. So now let me just calculate even that also. So your entry is 197.95 into 844 shares you have bought it in the cash market. No, that is 1,67,000. Now let's say in case your broker is giving you 5 times the exposure. So I divide it by 5 times. So around 33,000 rupees in the cash market is what I have bought, plus my original investment, that is one lot of Union Bank and one lot of Bank Nifty, Bank of India, will cost me 29. So my total investment here in this particular trade is around 63,000 rupees. So I invest 63,000 rupees. So what is my return on investment in one single day? Because you are talking about March 27th. Now 20,396 divided by 60,000, let's say 61,000. Let's round it up. So what is my return on investment? That is 30%, 33% is your return on investment. Now who will give that kind of a return on investment? I think that's a fabulous trade. If you ask me, I will just exit on this. Someone giving me 30% returns on a single day, that's fantastic returns. Now this is how the trading happens in paid trading. You don't need to do anything. You'll have to just watch the winning trades. You'll have to see what is this, the Z-score. You'll have to see what is the correlation, and then once you're done with the correlation, you check what is the RSI and what is the volatility. So once your conditions are perfect, then you enter into the trade. Now let me just go into an historical view of this particular two scripts, Union Bank and Bank of India. We had 16 number of trades. The profit is around 3,78,000. This would have been more or can be less also. Your profit per trade is 23,000 rupees on an average. And your highest winning trade is 1,06,000. I will show you this particular trade, 1 lakh rupees trade. It took only 2 days. That's a fantastic trade. And your highest losing trade is 87,000 rupees. We will see even this also, why we have got that. You won't usually have this 87,000. I will show you the reason why you'll not have this 87,000, because you could have exited that particular call much before when you have got the profits. So let me come back to the historical view of this particular Union Bank and Bank of India. Now my first call in Union Bank and Bank of India got generated in May 24, 2006. You can see that here. So this is my first call. So I have my investment was around 8 lakh rupees at that particular time. So in case someone was giving me 10 times exposure, 80,000 rupees was my investment. Now let me come back to that particular trade. So this is your trade. So that happened in May 5th, 2006. So Union Bank was a buy, 127.15, and you short Bank of India at 150. And you can see your Z-score perfect, 2.76. This can be either negative, this can be either positive also, but it has to be 2.7 and above. Now your correlation is roughly around 2% less. Your correlation should be 70, but in this case, you know, this particular two scripts are both banking scripts, and they are from the PSU banking sector, and they have a similar kind of a business and presence. So I don't mind entering at 68%, though I need 70%. Now coming back to the RSI. RSI, see here it is around 27%. When your left script is in green, your RSI should be 30% or near to 30%. So I will write it here. Then your left script, RSI should be around 30%. So your RSI should be 30% and your volatility should be around 2.5%. This is a perfect trade for me because the volatility is 27% or roughly near 28%. 2.37, I wanted 2.5, roughly near that. Now I enter this particular trade. So what happens? So May 5th, we have entered this trade. So May 5th, we have got this trade. So the first day, in Unionbank we bought, we short Bank of India. You can see 2.76 coming down to 1.75. The next day is your profit is around 17,000 rupees. Now we are looking at a Z-score of 1. So when this 2.76 falls down to 1, then your trade end, your particular trade ends. Now there is a strategy in this also. You can maximize your profits. Now whenever you get a trade, a perfect trade like this, volatility, RSI, your correlation, your Z-score, everything fits in, then you enter two lots on that particular trade. So what you do is, once this 2.76 comes down by 1%, so 1.7, you book one profit. That is one lot, you book the profit. Now the next lot you just carry on with the trade till it becomes 1. So here is your 1.04. So roughly on that intraday, particular day on May 18th, if you just check the prices, 118, 118 and 132 would have actually given you this 1. So since we calculated it on a hourly basis, it is showing us a trade that it is still continuing. So your exit for the next lot is 20,000 rupees here. So the first lot you have exited at 17,000 rupees and the next lot you have exited at 20,000 rupees. So that's around 37,000 rupees profit on two lots. Now you just forget that it has actually closed in green, but I am telling you this is a place where you should exit. That is nearly 1 becomes 0, 2.7 becomes 1. So in case if you would have exited at this particular day also, you would have made another 17,000 rupees profit. But why lose this 3,000 rupees profit when you have got this here itself? And the number of days. Now the approximate number of days taken for the first lot, it is the second day. First day itself you book the profit. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. So that is roughly around 13 trading days. That is your profit. Or you could have exited here also. So around 9 days. 9 days you have made that kind of a profit. Now let me just check that what is the next trade. Sorry. So our next trade was on July 24th. So May we had, June we did not have a call, July we had a call. So let me just come to that. So we have already seen this call. Now coming to July. This is the trade what happened. July 18th we had a call, the same Unionbank and Bank of India. You have short Unionbank at 85 and Bank of India you have bought at 82. Now 3.27 is your Z-score, 2.7 and above is your entry, 3.27 is your Z-score. Your correlation is fantastic, 95%. So the red left script, what we are talking about, the red left script, the RSI should be 70%. So here we have a perfect RSI of 74%. 70% and above is a fantastic figure. Your volatility doesn't matter here, 1.67. Other conditions all match. Your winning trades are 81%. I have shorted 1, 2, 3, 4. Fourth day, my profit is 44,745 rupees. Now what is my investment here? My investment here is 8,61,000 is a total turnover, but what I actually will be investing is 10% of this amount. That's so around 86,000 rupees is my investment on one lot of Union Bank and Bank of India. And what is my profit here? So 86,000, then just calculate it, it is more than 50%. So 44,745 divided by 86,000. So 52% is the profit on this particular trade. It just took me 4 days to make that kind of a profit. So let's come back to the next trade. So this is one trade again. This we got it on October 11th, 2007. So October 18th is the exit date, so we are getting that date. So here the same thing, Union Bank we have bought. Here Union Bank we have gone long, and Bank of India we are short. Now our condition is 2.7 and above, 94% is the correlation, we are looking at 70%. And when the left script is in green, it should be 30. That is what we have written. These are the conditions. And 2.54 is the volatility what we are looking at. So this is also a perfect trade. So the first day we had a loss. The second day we had a loss. 2.7, 2.8 became 2.69. Then it became 3.36. Then it went to 2.17. Then 1. And finally 0.86. So that's roughly around 24,000 rupees profit on this particular trade. 5 days trade. So now, so my requirement, my capital requirement is 88,000 rupees on this particular trade. Okay, so you can just calculate your profit here. 24,000. Let's round it off. 24,000 divided by 88,000. So that's around 27% profit on this particular trade. Now let's come back to the next trade. November 22nd, 2007. That was one of the peak times when the markets were all-time highs during those days. So let's come back to the next trade. So that trade happened in just a matter of 3-4 days. The next trade started here. So Union Bank we bought, Bank of India we short. 3.4 is the entry. We wanted 2.7. It is much more than that. 91% is the correlation. Your 34% is your RSI. 3.51 is your volatility. So you can always, there are chances when you can get trades within 1 week also, or after 1 year also in a particular pair. So that is what I am trying to show you here. So the first day 29,000 rupees profit, your 3.4 became 1.85. Next day it became 1.47. That's a fantastic profit. You could have exited all your trades here, because you are looking at 2.7, you have got it at 3.4, and here it has become 1.47. But 35,000 rupees is a fantastic trade, which is more than, let's say my investment here will be around 90,000 rupees, but my return on investment is more than 30%. So as you keep going down, you would have exited here, but number of days taken would have been more, but I would have been more happy coming out at this figure, the second day. 30% return on the second day. It's a fantastic trade. So that is 1, 2, 3, 4 trades. Now let's come to the trade on 2008. That is Jan 24 was the trade. This is what I wanted to show. This is this speciality of this particular application and the strategy. In fact, it's not the application, it's more about the strategy. This is the strategy where you can, it can just, your trade can double in one particular day. So this is the example of that particular trade. So Union Bank of India 163 is your entry. Bank of India, you short it at 388. Your Z score is 2.9. We wanted 2.7. We wanted 70% here. It is 88%. Since it is on green, we wanted 30% here. It's perfect 29%. 4.7 is the volatility. We wanted 2.54. Now just see the trade. This 163 became 204 the next day. This 388 what we short went up to 410. That is on first day, around 78,000 rupees profit. The next day 163 became 196. 388 became 364. And your Z score has come to 0.1. We were looking at 1. This has become 0.1. Your investment of around 1 lakh rupees, that is 10 lakh 16,000, 10 times I am just taking the exposure. So my 1 lakh has become 1 lakh 6,000 rupees. That is 100% return on this particular trade. That duration, the time taken is just only 2 days. And that's what we say about this particular strategy. So likewise, we had the trade on 2008. Those were one of the happiest days of that market. And then we started seeing the bad days after that. Now coming back to this trade on October 27, 2008. We short Union Bank at 121.90. We bought Bank of India at 203. We wanted a Z score of 2.7, 3.1 is existing. 84% is the correlation. We were looking at 70% here, 64. 4.8 is the volatility. Just see the trade. On October 31st, it ended. October 27, just 2 trading days. The first day your Z score became 2.3. The next day it became 0.5. Your trade profit is 64,000 rupees on that particular trade. Your investment is around 1 lakh here. On an investment of 1 lakh, you have made a profit of 64,000 rupees in 2 days. That is the return on investment of 60%. So likewise, we have this calls. So I just wanted to give you show you an example of when you place your trade perfectly and follow the terms and conditions, you are bound to get profits. That is what I just wanted to show. So that is nothing but your Z score should be 2.7 and above, correlation 70% above, winning trade 70% and above. When you get that left script as red, your RSI should be 70. When you get that left script in green, your RSI should be 30. Your volatility can be around 2.5, nearly around 2.5%. So these are the trades that we are seeing. So 66%, 2.4%. You can see the profit here. The first day it was 9,000, the second day it's 4,000, the third day 33,000 rupees. So your 2.9 became 1 here. So you can happily exit this trade at 30% return here on the third day. Or in case if you would have wanted to continue this trade, you would have finally made 51,000 rupees when your Z score became 0.39. So that's roughly around 1, 2, 3, 4, 5, 6, 7, 8, 9 days of trading. Your profit is around 50,000 rupees. Your investment is 1 lakh rupees. So that is your return on investment of 50%. So these are some of the trades like that. So May 2009 we had this. Again 51,000. So I am just looking for this highest losing trade. I just wanted to show you that. So let me check where that particular trade has come. So this also ended in a profit of 34,000. So this is another trade, 1, 2, 3, 4, 5, 6 days. 6 days, 37,000 rupees. So this is a showing a total of 17,000 rupees loss, but I will tell you why that is not right. Yeah, Z-score is 3.34 here. Your Z-score fell to 1.88. You could have booked all your profits here at 23,000 rupees. So though this particular script we have got it as losses, but there was a profit which we could have booked. 25,000 rupees on this particular day, that is November 3rd. So booking profit is one very important thing. Or November 8th, it was around 31,000 rupees, and then subsequently your Z-score started going up. So we have said that we have got a loss of 17,000 rupees, but this was a profitable trade where you could have exited with 30,000 rupees profit also. That is within a span of, the idea is not to stay on a trade for many days, to try to book as much as profit as you can within a few days after you get the trade. 1, 2, 3, 4, 5, 6, 7, 8. So 9th day around 31,000 rupees is your profit. So that is a fantastic return, around 30% return. I think anyone should be happy with that, 30% return in 10 days. So this is the losing trade what we are talking about, 87,175. Now let's just see why we have lost this particular trade, or why we haven't booked the profit on this particular trade. Here Unionbank is short, Bank of India is buy, 2.99, this is perfect, 93 is perfect. Now this 72 is perfect because we were looking at 70, 2.27, 2.24 volatility. Now 2.99 when you have got it, that is your trade triggers. Now you look for first exit of around 1% below. Now the next day your profit is 10,000 rupees, and then subsequently you had profits. So this 1 point, I told you 2.9 or 2.9 should come to around at least 2, where you can exit your first profit. So 1.7 you had that opportunity, 11,900 rupees. The next opportunity you had at 1.38, where 16,000 rupees is your profit. You could have exit that trade. And if you kept on continuing, then this particular Z-score has risen, and then you have totally made this loss. But if you overall check it, you started with a negative profit minus, and then you had a very good opportunity to exit the trade at much with profits only. So if you consider this technically, yes, this is the loss, but you had an opportunity to exit a trade. These are all your profits. So I don't consider this as a highest losing trade. I would rather consider it as a profitable trade which gave me an opportunity to exit. So I should have come out of that particular trade on that day itself. So these are some of the trades. Now we have one more trade here. That's in 2013. Unionbank short, buy Bank of India, 68%, 1.67, 2.76 is the Z-score. Now I am looking at 1, So 1 has happened here. 20,000 rupees is my profit that I would have booked, or 22,000 rupees on the close of that particular trade. So these are again some of the trades. We had an opportunity here also. You can see that 2.7 became around 1.4 here, 1.37 also, 1 here. So once you get that figure of 1, you exit. That is 32,000 rupees profit. This is not a loss trade. ₹23,000 at the end of the closing of this trade. 24,000 here. And currently this is the running trade which we got on March 26th, that is day before yesterday. So this is one example what I have tried to show you, that is a live call which is running with the historical profits. And so in case you trade this way, I don't see any reason why you should be losing. I mean, there's nothing called as a losing trade. Might be there might be 1 or 2 trades, but overall this particular strategy is designed in such a way that your losses are predefined. You will know what will be your maximum loss, and profit is something which you should be booking, because any particular trade which comes here will definitely give you a very good opportunity to exit, provided you book your profits and try to be happy with at least some 10% or 20% or 30% return if you are happy. And you have seen some trades like 60%. You have seen one trade which has doubled in one day. So this is the kind of strategy that we follow on this particular Neutree, that is a paid trading strategy. So in case if you are interested, we'll just do some more backtesting data for some more scripts. So at least for this particular script, let me bind this session. Thanks. In case if you have any doubts, you can call me. Call me on 974321133, or you can mail me on mon2944@yahoo.com. So these are the conditions for entry, and your exit z-score should be should be 1. So this is a very simple strategy. Everything is automated. Only you'll have to place your trade, book your profits. That's it. Very simple. Thanks for coming.